Welcome back to Trendlines over Headlines, the show where we break down the markets with some of the best traders and analysts out there. My name's Patrick Dunawilla. I'm the editor of the Chart Report, and I'll be your host. We've got a great show for you today. Howard Lindzon is going to be joining us right here in the studio to make sense of these markets. If you don't know Howard, he's a successful entrepreneur and venture capitalist. He's the founder and managing partner of Social Leverage, which is an early stage venture fund. And he's known for his early investments in companies like Robinhood, eToro, Manscaped, and many more. So he's got a unique perspective, and you won't want to miss what he has to say. But before we talk to Howie, it's Friday. The markets are closed. So let's take a quick look at how this week played out. It was a shortened week with the holiday on Monday, but all four major indices closed lower. The Nasdaq led, but it still fell about 1.3%. The Russell 2000 lagged by a decent margin, dropping nearly 3%. Now, taking a closer look at the S&P 500, it fell about 1.4%, but keep in mind, it closed higher for 5 consecutive weeks leading up to this, so a little bit of weakness here is perfectly normal, and we're continuing to hold above those August highs around 4,300. Bulls want to see that level act as support in the near term. If it fails, we could potentially retest that notorious 4,200 level, so definitely keep an eye on those August highs next week as potential support. Taking a closer look at sector performance, healthcare was the only sector that closed higher this week, inching higher by just 0.25%. On the other hand, real estate lagged, dropping nearly 4%. Anyway, that's enough from me. Let's welcome Howard onto the show. All right, Howie, welcome to the show, and thanks for coming in today.
Excited. It's my favorite daily read.
Oh, the Chart Report?
Yeah.
Yeah?
It does its job.
So you're in Coronado for the summer. You enjoying the summer so far?
Loving the summer. Coronado is maybe everybody has their own favorite places. I think it's the best spot in the world.
Yeah.
You have the Navy.
Yeah.
You have it's a walking town. In 10 minutes, I'm here in a great media office, which is, home of Chart Report.
Yeah, Chart Report headquarters.
We're in like the gas line.
Right.
Of San Diego, which is cool.
Yeah. Any big plans this summer? Just kind of.
I'm on Twitter right now. I'm Poor Howard, which is Best Howard.
I love how you change your handle like that. I think it's hilarious.
The thing about Twitter, we'll talk about Twitter, is if I signed up for the blue, which is stupid.
So you're not signed up for blue?
No, and it's terrible. But if I sign up for the blue, and I'd pay $10,000 a year for Twitter, we can get into that, but I don't want to pay $8 for the shitty features it has.
Yeah.
One of the best features, I could change my handle. If I go Twitter blue, it won't let me change my handle.
Oh, because it's like verified, right? They don't want to.
So I can't even be me on Twitter blue. Like, it's just, Twitter has always been that company that just makes you smack your forehead.
I know. And so you were here about a year ago on the show last, and it's funny, one of the questions I asked you was before Elon had bought Twitter, and I asked you, if you were CEO, what would you do? And your answer was, first, I'd fire everyone. And that's pretty much what he did, right?
Yeah, I don't know the total damage. I think StockTwits is 60-ish people, give or take. I don't run the day-to-day. Rishi, the CEO, does. So you figure 100 times that would be 600, and then double that. So maybe 12, and then double that, 2,000. Seems absurd. For the scale that they have and what their actual business is. So I think they're probably down under 2,000. So that they were at 7,000. So that was the easiest answer. You teed that up. I think it's still a basket case of a company. I think Elon bought it, and it does for Elon what he needs it to do. It's a bully pulpit. It's his marketing vehicle. I don't think so it works for Elon.
Right.
Definitely. It doesn't work for me. So as a user, it just continues to degrade because I can't pay for the product.
So you think it's worse off now
for me as a user?
When Musk bought it?
For me as a user. For Elon Musk, the bank's paid for it. Right. He owns it. He's marketing himself.
Yeah.
He can fight the media. So you, at that level of wealth and power, Jeff Bezos owns Washington Post. The New York Times is owned by a family. You need media. Fox is owned by Fox and CNN is owned by whatever.
Yeah.
He needed a voice. He's getting harpooned. And forever we want to say about Elon Musk, Starlink is cool. Tesla's amazing. And he's made it all about himself, not about like the company. So, that's what's to dislike about him. Tesla's built by thousands of people and tens of thousands of people, and he's fighting everybody, kind of like a villain. But for me, it's unfortunate because Twitter was my community, and I always have StockTwits, but Twitter feels to me like I'm being penalized for just using the product.
Yeah.
That's stupid.
Yeah. Well, listen, I got a bunch of market questions we'll get into.
But good for him for firing the people. That was obvious. The next question is, what's the business?
Yeah. So, like I said, you were here about a year ago. Markets were melting down. It was ugly. It was pretty dreary, right? But we've had a nice rebound since. The NASDAQ's up something like 36% year to date. Yeah. So if I had to ask you, gun to your head, what do you think the second half of the year looks like for something like the NASDAQ and tech stocks specifically?
Well, I'm a momentum guy. So when we talked, I was getting stopped out and we were talking about Apple, and Apple was like there.
Right.
Like, I was like, depends what Apple does.
Well, it's funny, last year we were talking about how everyone was concerned that Apple was holding up so well and it was just Apple.
Yeah.
And it's kind of similar now where you're hearing the narrative and everyone's talking about it's only 2 stocks leading or it's only 10 stocks leading. And again, you have that concern over Apple leading. So why is that? Why do you think people hate to see the biggest and the best leading?
Well, I was watching it because it's my biggest position and because that's the market to me. If you live in America, which is 2 economies, I call it the degenerate economy and the luxury economy, Apple fits into both. Everything goes through goes through Apple.
Well, so could you go into the degenerate economy thing? Because I think it's an interesting thesis of yours. So
I have this thesis, first of all, on Apple. I'm super bullish on the price action. So I'm a price guy. The fundamentals are fine. Apple's great. Google's great. Microsoft's great. NVIDIA is overpriced, but great. We could argue maybe it isn't, but things are great.
Yeah.
Because the biggest companies are kicking ass. Right? The government can't interfere with them. Maybe their biggest problem is they can't buy companies because of FTC, but they'll figure that out. So we have this weird economy where we are in another bull market in the sense of just classical sense. This isn't just a bounce, it's a bull market. And so if we drop 20%, it'd be another bear market. Possible, but like, who knows? But it's rare that like another bull market is led by the exact same companies that led the last one.
Right.
That
you typically hear
not happen. Nifty 50.
You need new leaders. Yeah.
There's new leaders.
Right.
Okay. So that's just new. It doesn't change the fact that the markets are actually working the same. There are new leaders. They just happen to be the same for the most part as the old leaders. Throw in a couple fantasy drinks like Celsius and obviously the one you guys drink, that's still leading. Yeah. Chipotle, there's still leadership. It's kind of from the same companies that led the last. That's blowing people's minds, including mine, because that's historically never happened.
Right.
So why? Tech. Margins. These companies have tremendous margins, tremendous scale, and then but also tremendous depth. Apple will have AI, right? It get better. Microsoft has AI. They did the deal with OpenAI. Google has its own AI. They have their own chipsets. Like, these companies are like planets. So investing in Apple is the market. So when we were talking 11 months ago, I'm like, well, I'm getting stopped at everything else. If Apple goes, we're fucked. Guess what? Apple's at all-time highs. I'm not going to tell you we're fucked. Like, we are in a bull market,
right.
But I don't know where we'll be in 6 months. I think the thing that you got to see is what happens with housing. Housing's doing fine, but why is it doing fine? You have no incentive to move because you'd be swapping your mortgage for a higher mortgage. So there's all this false data out there because housing's tight. But a lot of reason it's tight is, why would I sell if I have a 2 or 3% mortgage? I'm penalizing myself. So we have a tight market. And so we don't really know what's going on in a lot of the major cities, because if you're in a good mortgage, you can't move. And therefore, people who want to get those homes can't get them.
Right.
So we're in a weird market. The second thing is, so what happens there? We don't know. I mean, at some point, something's got to give. Everybody knows commercial screwed. The price action shows it. So there's no new news there. Who knows? And the third thing, I think the wild card is like, do student loan. How bad is the student loan thing? When August comes, end of August, assuming someone doesn't intervene, student loans have to start getting paid back. I don't know. That's like hundreds of billions a month in money coming. You thought the First Republic thing and Silicon Valley Bank. Once these kids have to start taking that $100 billion a month and paying back loans that they thought they'd never have to again.
Yeah, that's a big issue among people my age.
And it's a big issue amongst banks.
Yeah.
So let's see that. No, that's been 3 years. No one's had to pay a loan. We'll see how that affects spending. Now that's only 11% of the population. So, but again, I can't predict. I would just say I feel a lot better than I felt 11 months ago because Apple didn't break.
Right.
Rates are higher, but we've learned to live with them, or a majority of the population's learned to live with them. Walmart's still strong. So the middle of the world, Costco, Walmart, McDonald's, super strong. So you can still get your dollar meal. You can still go to Costco. You can still go to Walmart. They haven't imploded. So this middle is controlled. To compete in the middle against these companies, forget about it.
Yeah.
They're going to benefit from AI. They figured out how to make money on 2% margins.
So that's
the middle.
Yeah.
So if I'm going to build a business or think about that, why? There's just nothing there. They're expert. They've just so entrenched serving America, right? So the fringe is where the money is going to be made, right? Like if you want to own luxury, you've got to be in the luxury business because that's where the margins are. So LVMH, Hermes, even Deckers in the United States, which is kind of America's version of LVMH, or Roll Up, which is an incredible stock. I don't know the company that well, but they've done great acquisitions.
Yeah.
They're kind of like America's version of it. And so high margin businesses, because they're small. I mean, they're big now in market cap, but like McDonald's, Costco, Walmart aren't getting in that business. Mm-hmm. And so they have a moat, which is high margins, and they're catering to a growing, wealthier version of that one demographic. So they're printing money. And then there's the degenerates,
right,
which are everybody. So by degenerates, I don't mean you or an 18-year-old that likes to blow their last money or a day trader. I mean people my age, my friends who I golf with, are blowing $200 a day on betting baseball at 9 a.m. because there's a noon game on the East Coast on DraftKings, because that's entertainment. That's 15 grand a year that they might lose if they were wrong every day of the year, but that's like them doing 10 good meals. So there's this massive 8 to 80 population that gambles, that smokes, that vapes, that goes to casino. There's a Encore casino in Boston. Yeah. There's Vegas casinos in other cities. So this degenerate economy, they trade. Robinhood just rolled out 24-hour trading.
DraftKings.
So there's this unbelievable market brewing in sports, media, entertainment, all catered towards degenerate.
Yeah, I see.
And by degenerate, I don't mean that they're degenerate people. It's just a category that's their entertainment.
And would you say this shift kind of happened after COVID? Is that kind of the thought?
That was the shift. Everybody thought they were going to be an investor, and I still think that's a big market, but it's this degenerate economy. Give me action.
Yeah.
Action is entertainment. Speculation is entertainment. And then there's just the wealth that people, I don't want to wear LVMH, but I use them as my model because I don't want logos all over my body. I'll support my brands, but I don't want to be adorned in Gucci or Prada or LVMH or Hermes. But you have to go build a brand that has 70% gross margins.
Right.
Because cost of customer acquisition is exploded. And that's the biggest change for startups in the world is during Web 2, where we talked about the internet, it was very open. Well, now it's closed. You have Apple, Facebook, TikTok. Like you have to go to these giants and ask for permission to get at their traffic. Mm-hmm. And that now is expensive. it was free for a long time. We could all go hack YouTube and Facebook and arbitrage that and open a Shopify store and sell scarves that were made on Alibaba. But that world is over because the cost of customer acquisition is high.
Yeah.
So those channels will still exist, but you better go be selling a product that has very high margin.
Right.
So that's the world that I'm talking about.
Yeah, and I really like that concept of the degenerate economy.
It just is.
I mean, not only
putting words on it.
Right. Not only does it have a great name,
yeah,
but it gets at that like kind of palpable shift in how consumers are spending their money post-COVID.
And they're not just doing it on their couch.
Yeah.
They'll go to the event. So that's the thing that's different than COVID. Oh, we're going to stay in our home. Fat Jewish, we did a movie. Fat Jewish had this incredible line. I think he's a big Instagrammer.
Yeah.
And he's just so culturally dialed in. And he said something in our movie that we did, and he said something like, 30 years ago, if you were scared or you didn't want anything bad to happen, you could just sit on your couch in your room, watch, and nothing bad could happen.
Right.
And today, that same couch, you could blow the whole world up, right? Like you can wreck yourself, you can wreck your family, you can wreck your credit, you can just right off your phone. And so it's completely flipped.
Yeah.
So that's the degenerate economy, is we could hide from it. Now we're all in it.
Right.
And so we got to live with it. And what are the best companies that will benefit from that? The casinos, sadly, the DraftKings of the world. We'll see. But because they pay taxes, because the government has blessed them, it is what it is. You can hate on it, but this is the world we live in.
Yeah, and I guess the phone is a big part of the degenerate economy,
That's
right?
why Apple ties in and Google ties into this.
Right. In fact, in our conversation,
you can't lie to yourself and say I'm not part of it if I just own Apple. I don't agree. Their DraftKings is on the Apple Store.
Right.
They take a piece of all the revenue if it runs through the iOS. So again, we live in this world where if you had told me that I should own Apple and Microsoft only, that would be absurd. But guess what? It's 50% of Warren Buffett's holdings, and he's yet to buy Microsoft, and he will, because Microsoft diversifies from Apple. They have enterprise businesses, LinkedIn, Microsoft products to the enterprise.
Do they own Slack?
Azure. No, Salesforce does.
Oh, that's right. But
Microsoft is probably the biggest hedge, or not the biggest hedge, the biggest diversifier to owning Apple would be Microsoft.
Yeah.
Because they're different businesses, but yet they keep themselves honest as well. So if you own anything beyond those two, and if you want to throw in really high speculation in hardware, NVIDIA and Tesla, anything beyond those four stocks, are you really diversifying or are you dampening your diversification?
I see. Yeah. And
that's weird.
Last time you were on, you mentioned that Apple could be the winner of crypto in the sense that they own the wallet.
They won already.
They own the wallet.
Yeah.
And that's kind of crypto's next step to adoption, is that kind of mobile payments, that whole thing. And you have to go through Apple if you're going to achieve that. Is that right?
Apple won't get into the business till there's 1 billion wallets.
Yeah.
But then they're in the business. You know what I mean? They're
Once
now
they
a
have
bank,
scale, you're saying.
of last resort, because I trust them.
Yeah.
So, there's a lot of work to be done in crypto. But that's a whole nother subject that's fun to talk about, but I'm not the expert. I talk to experts, but it doesn't fascinate me because I don't use it. And that's just because I'm an American. I don't need it. But it doesn't mean it's going away. It's not going away.
Yeah. So I want to move on to private markets and kind of your venture capital activity. Yeah. Last time you were here, you mentioned you weren't writing many checks. Yeah. And of course, with rates ripping and everything going on with tech and everything, the whole venture field just seemed like it kind of was at a standstill.
Yeah.
So, have you seen any pickup in the private markets, or is it still kind of winter for startups? What are you seeing there?
It's a good question. It's supposed to be my job, and the one thing I'm supposed to be good at. I would say that it's been tough. Like, I got that right. Of all my calls, because I'm wrong a lot, the best call in my career was not writing checks with my LP's money the last 2 years.
Right. I mean, even before the peak, you were getting a little It was
stupid, and I was telling whoever.
Just in terms of the pitches? Like, what do you mean by that?
Well, again, the Kool-Aid was being drunk, right? No one was giving credit to why we were in a bubble or bull market.
Right.
The credit was ZERP. Right. The credit was Apple. The credit was
Nobody was
the
talking,
cloud.
right? Nobody was mentioning
Well,
we're going up because of
They all thought
easy
they were
money,
geniuses.
right? Everything
You had
was
people writing books, growth hacking. What's the other one? And Reid Hoffman's a genius. He created LinkedIn, but he wrote a book called Blitzkrieging.
okay.
Okay. First of all, God bless these people. They're super smart, but it's a lie.
Yeah.
Okay. LinkedIn worked because the product worked, right? If you filled out your profile, which is they had that hack down. They don't care about what else is going on the site. But believe me, the people that mattered in that company is like, get people to fill out their profile because that is what enterprises need to do recruiting.
Right.
All the other stuff is nonsense. That's why the product can be terrible.
Yeah.
Because they want to make sure billions of people have their profile filled out because that's what the recruiters need. So they've got that hack. Excellent acquisition by Microsoft. Looking through the fact that everybody saw, oh, the product sucks. The product does what it needs to do. Everything else is just nonsense. This is Twitter's problem. What do they do that matters to everybody? Facebook, in the end, matters. We go on Instagram to go after our interests. If you say I'm into cycling by like clicking on a few things, you will be getting inundated with cycling stuff, right? So Facebook has their special purpose. LinkedIn has their special purpose. The big lie of this bubble was all these people leaving those companies spinning like they were responsible for this. It's cool, like people, that's the way the world works. So you had all these people like Twitter that got laid off. Those 7,000 people that get laid off, are they employable? Like, do I want to hire the 6,000th hire from Twitter that might have done nothing for 3 years except twiddle their thumbs and complain about the woke versus the right, or not really coded, as Elon said? Like, are they hireable? Like, so you have this incredible exhaust of like this bubble, which is hundreds of thousands of people that were trained to be engineers, just moving pixels around and really doing stuff, and then claiming expertise. But the expertise came from 0% interest rates, the cloud, iOS, YouTube, Google, Facebook, the products themselves, which allowed us to grow, Shopify. So now we get into like why I'm bullish, finally, again, barring prices. Because now we all know that, or the people like me know that. So you can't fool me. Like, yeah, you were talking your game and raising your money, but we weren't investing because we saw that like, your price, like the math was off.
The valuations.
The math was off.
Yeah.
Valuations do matter. They happen in the public. Nvidia's valuation doesn't matter today, but
you were talking then, right?
Yeah.
So, after last year, we saw all those layoffs. Are companies more lean now? Is it a better environment to be writing checks?
If you're Apple, you've made the cuts.
Yeah.
You know there's more cuts coming. Everybody who wasn't cut better be busy because you better show your worth. So there's going to be more cuts. It just won't maybe be as big as they were during the wipeout of 21, 22, but they're still coming. And people know they're twiddling their thumbs. There's millions of people twiddling their thumbs with second jobs and sneaking around. That's how people do it. But the reason I'm bullish is we know what we know. Like, if you want to build a Shopify store, you better have a product that has margins because buying that user. And if you don't, you're not going to raise money. So if you're catering to the LVMH economy, this is a great time to use tech to go build that brand. If you're catering to the degenerate economy, this is a great time to use these platforms that were built. But you better have a real plan and a real product and a real sense of how to grow, because your margins are going to be lower. You're going to have to do more volume. So I'm bullish because people that recognize that are creating companies that fit my thesis. Because now I have a vision of what the future looks like, which is that plus mixed, meaning it can't just be digital, it has to be physical too. I mean, so what have we had over the last few years? We just got announced slam ball, we just had pickleball's blown up. There's golf, there's all these sports that will live tour, and change golf, right? So you have this mixed, it's digital and physical. Mm-hmm. So I believe they're going to have more like physical businesses, real businesses, but tech-infused stuff. So tech, I call it tech as a garnish. Mm-hmm. So to combine with the degenerate economy, which DraftKings is the platform, or FanDuel and MGM, you now have to have pickleball comes along, and now there's a whole new slew of inventory that can be bet on.
You think we're going to be betting on pickleball?
We are betting on pickleball. We're betting on highlight. Kids are on a highlight app betting. Like ping pong is $75 million was bet on ping pong.
Are you kidding me?
Yeah, just on DraftKings.
Oh, man.
So inventory. So what does America do great? America's fantastic at making up things to deal with wealth and free time, leisure. So America's the king of leisure. Part of it is because of the middle class. Part of it, even though it's shrinking, part of it is we have time because of computers and because of all this productivity. So think about all the games that we've invented in the last 2 years during COVID. Pickleball's fastest growing sport of all time. Golf is, we're disinvesting in a par 3 company. It's going to be incredibly fast growing company.
What's funny about that is it seems like not too long ago, the narrative around golf was they can't get new young people to get excited about it, things like that.
Well, those were all true.
Yeah.
And then something changed.
Yeah.
It's like Apple, it didn't break down. So now that it's breaking out, why? Why? Because, there's a million reasons why. Because they're fucking printing money. But most importantly, don't overthink it. Yes, golf was dead as a sport. Guess what happened? COVID. Guess what happened? YouTube, where my son could learn, where millions of kids could learn on Instagram and YouTube how to play golf.
Yeah.
3-dimensionally. Like over and over. Like you can get great instruction on YouTube to how to play golf. That's the most complicated game. They've simplified it. So everybody can play golf now. You don't have to have a private lesson. And then you have Topgolf that came along. Who would have thought that would have worked? Okay, it worked. What happened? Corporations are renting it out. Everybody's playing. The next thing will be par 3, which is like 2-hour golf, but real golf. So it's just like America's spinning up stuff, and that's bullish.
Yeah.
It may not be like the cloud, but combined with the cloud and combined with gambling and combined with fashion and combined with Shopify and combined with Americans loving to have affinity with certain brands, we've just got a whole new economy brewed up.
So what I'm hearing here is Howie's bullish golf. Is that fair?
I'm bullish on, many things. Golf is the one that I'm having the most fun with. I'm not enjoying the game like I used to because the courses are long and I don't have the 5 hours. And I love golf, but I don't have the time to commit to it.
My issue with it is I'll play, I'll have a few good rounds, and then I'll get to a third round where I'm terrible, and I say, to hell with it, and I just give up.
Well, like any sport, whether it's fitness, where you have to really, you need time.
Yeah.
Golf is a time game, and so that's why it's been like cornered off as like something for the rich. But with YouTube and now with Topgolf, everybody can get at it, and so I was approached by some guys that were at my country club. Who are lifetime golfers, and they're building a par 3 golf company. And it goes into my whole thesis of Degenerate and the LVMH economy, because we're building golf. It's just a new form factor, much like pickleball is ping pong or tennis, new form factor. So we're not changing anything other than the time. So we're flexing time from 5 hours to 2 hours. We're flexing cost, and we're flexing enjoyment and accessibility because it's enjoyable for people that don't hit the ball 300 yards to just take that out of their mindset.
And what's the company called?
Oh, the company's called Grass Clippings.
Is that?
This is Stay Grassy is just one of their funny sayings, but they're not an e-commerce company. They started out as one, selling hats and shirts.
And what is it exactly?
So they are we are building a golf course in Phoenix, and we partner with the city of Tempe on an existing golf course.
Oh wow!
We have a 50-year lease, and we're building the best par 3 course in the world. It'll look and feel like a stadium PGA golf tournament. Not from 80 yards to 220-yard holes. No driver. Obviously, if you're a 5-year-old, you may want to hit a driver, but like adults
or me.
Don't hit drivers. So it's meant for faster golf, competitive golf, and fun, and uses less land, less water, and the course will be lit.
Less water, that's important in Arizona.
It's important everywhere, but it's just this whole idea of entertainment, but like reformatting it, like pickleball did, like slam ball's doing in basketball, like a lot of sports.
Or just giving an update to a sport that hasn't changed or innovated in
the rules can be the same. It's
200
just a
years,
shrunk down version of golf. And then we tie in teams and ownership and gambling and fantasy. And so we're going to build, there's the software side and then there's the physical side. So it's really a fun, it just came along out of nowhere.
Yeah.
But it fits our thesis of this world that mixed media, you know, there's a physical aspect, there's a digital aspect. It's not a technology company, but technology will make it more interesting and fun, and it will allow us to create different revenue streams. And it goes golf, because of fashion and because of its global nature, is here to stay. And so if rich people like it, poor people are going to like it. And Tiger Woods made the game more accessible, and now there's people from all over the world that are professionals. The other problem with golf is, because of the driver, there's only a certain amount of people that can hit it 350 yards. They're kind of like freaks.
Yeah.
And so that's where you have to train to become, to make the tour.
Right.
Well, if you take the driver out of people's hands, it opens up to who could win every weekend to millions of people.
I see.
So I think the local legend will come back into play. That person who's 50 years old and could have been one of the best golfers in the world, but because he couldn't make money, because there's only a certain amount of people that make money, can now be back and so it brings that like media side into it. So really it's golf, but different. And having the course and like really having the lab to try all these things out, and it's in my own backyard in Phoenix, which obviously made a difference. So that's really fun. But there's 4 factors that I think along around this this economy. You know, there's things that I enjoy. You know, fitness, and I choose that through cycling. I do fitness, you know, and workouts, but cycling, which is a huge growth sport. You have gravel bike, you have e-bike, you have a global warming, so the Alps are becoming summer places.
It seems like I see electric bike places everywhere.
Yeah, so it was already the biggest sport in the world, or the biggest fitness activity. 50% of the people bike. So you now add gravel, so now you have like an expansion of the industry. You have golf, which is expanding. You have racket sports, which are expanding. And then the other 2 things that are fascinating to me are watches. It's like shoes for young people. It's a way for you to express yourself. Apple has done an amazing job actually adding value to the watch industry, because if you don't wear an Apple Watch, why wouldn't you? What fancy watch are you wearing? So it's like a fashion statement. So watches are super interesting to me. Cycling, super interesting to me. Golf is, like I said, super interesting to me. So there's certain things that are interesting to me, and we're investing in all those. We're investors in Watchbox, which is like eBay for very high-end watches, and they've started opening boutiques. And then we're investors in a cycling company called Distance. And what Distance is they're aggregating all these very high-end brands from Europe that would never have a way to sell in the US. So it's kind of like LVMH of cycling.
Oh, wow.
And we're curating them down, and now people can get access to the best European brands and ride in the United States. So we think that's a cool, very simple e-commerce company that we just funded.
Yeah, I mean, those seem like really non-traditional for you investments. I mean, typically you've been in the fintech space, so it does seem a little non-traditional, but given what you said, they all check the boxes for the degenerate economy. I mean, that makes a lot more sense.
And for the LVMH, meaning I cycle. Do I want to wear Nike gear? No. I mean, I'll wear it. It's the same. Okay, other than the logo and the fabrics. But I choose not to, because I want to tell people that I cycle, right? And I don't want to wear cycling gear day to day anyways, but if I do, I want people to know that I care about this. And so, you get sold the bill of goods, like performance wear. So you have these new brands that resonate with you, and they cost 5 times what the other, but you're not going to begrudge me for paying 5 times. It's my money.
Right.
So there's all these brands that had no access to people like me, and now we're giving people like me access to those brands. So it's like Alo. There was Lulu, and now there's going to be 100. There's Vuari, and there's like, you go to New York, and there's like 9 yoga places right next to each other. I don't even do yoga. But for cycling, there's like nothing. Mm-hmm. So there's going to be all these brands. Same with watches.
Very cool. Yeah, I got to check out Watchbox.
Yeah, Watchbox.
And of course, you got Manscaped as well.
I have Manscaped because your balls are very important. So Manscaped is a cool company too, yeah. So people love brands. Is it easy to build a brand? No. Has it ever been easier? Have you ever had more tools to do this properly? Yes. So I think That part hasn't changed. What has changed is the door has closed on the people that didn't really know how to do it and didn't respect the opportunity they had to take that shot on goal, and they ran out of money, or they didn't think through the margins properly. They didn't build a business.
Yeah.
So the next attacks will be much better. So that's why I'm bullish. Like, we've gotten through that fluffy phase, and now for serious people, there's a good opportunity.
Are there any portfolio companies within social leverage that you're excited about?
Yeah. So my thesis, so we had this. Social leverage has, Gary, my partner, invests in the enterprise. Matt Ober's data and wealth. We're big in wealth tech, but it's not sexy. Wealth management.
Yeah.
The idea that governments around the world printed money. Hate it or love it. It
is what it is. Yeah.
What do people need to do with their money? Invest it, save it,
do something with it. Yeah.
You know what I mean? So
right.
Wealth management is just obvious.
Not bet on ping pong.
Not bet on ping pong. Or you know what I mean? Or carve out it. So wealth management, very boring, completely greenfield. But also but you got to know what you're doing. And so luckily I know that space very well from just having those problems myself and seeing how not to do it.
Right.
And watching the RIA business. So I love that space, but it pays the bills, but it doesn't excite me.
Yeah.
It's more behavioral than it is technology. So we're very focused on that. My trick through that bubble we just went through was I'm an investor. I survived the crash in 99. And I survived. What came out on the other side? Someone who loved investing. But my problem was I hated CNBC, couldn't afford Bloomberg, hated E-Trade. So I hated the brands. Mm-hmm. So what did I do? I used Web 2 to invest in the reimagining of these brands. Right. eToro, StockTwits, Koifin.
Oh, I thought you meant starting Wall Strip.
Wall Strip. Yeah. But that was just right place, right time. We saw it. But yeah, building the next CNBC, building the next Bloomberg terminal for regular people, the next Yahoo Finance with Koifin, building the next with StockTwits, building the next Schwab with Robinhood and eToro. And guess what? Right or wrong, those bets were made. There's no need for them anymore. Right. I'm not going to go do that again.
Right.
It's up to Robinhood and Koifin and all these companies to make it happen. Yeah, you don't need more Robinhoods.
So it sounds like as a venture capitalist, you're kind of just being very patient, just wait to be impressed, really, right? Is that fair?
Impressed. I played my hand. I have no tricks. But I am 58. And I'm an empty nester that goes to the LVMH economy, and all my friends are gambling. So the degenerate economy.
Goes to the LVMH.
Well, it does. It's I don't get why people would line up at LVMH, but I get why people aspire for things, right? And they don't care about price. Like Aloe. How different is it than Lulu? But yet people pay double the price, including me.
Right.
Because it's not crowded, it's sexier, you know what I mean? Whatever. It's just brand.
It's new.
It's brand, it's elegant, whatever, you fall for it. What a sex appeal, whatever it is that, that those brands have. It could be fleeting, but man, the profits are insane because they're selling the same thing that costs the same for everybody else with a different logo for marked up prices. Right. That's genius. So I'm 58, I live in that world. I wear cotton I wear, it's not fancy, but I live in that world. Yeah. Through travel and hotels and food. And I live in the degenerate world because my son is doing parlays and my friends are doing parlays. I think it's stupid, but it's happening. Yeah. So now that I live in those worlds, I have a new trick, which is talk to those people or follow my own instincts along brands. And then I told you about outside, like sports. So I'm not going to invent a new sport, but I can tell when something's popular. And then what do those things need? And so we're looking for entrepreneurs across those type of sections. And I'm writing about it and I put the vibe out and I'm writing about the degenerate economy. So what happens? People start showing me deals. So it's working. It just took a couple years of reimagining my own job. Yeah. And luckily that coincided with prices being so stupid it didn't matter. It was just I don't even want to look. Well, I could have been sucked in if people were less greedy, But lucky for me in the private markets, you can't, overpaying is really dangerous because you can't get
There's
out.
no liquidity, yeah.
You overpay for NVIDIA, you can change your mind the next day.
Right.
You may be down 20% or up 20%. You can change your mind. That is very important, especially in a rising interest rate world. Even if we're going to accuse people of overpaying, they're just playing a game because they can get out. They may not, and that's the game you and I play, is that people are dumb or they don't have or they don't have money management skills. Not dumb, they're just not professional managing of the positions. You can't do that in the private markets. That's why Tiger's blowing up and all these funds are blowing up because they can't get out.
Yeah, I think that's a good approach in your area of the world, is just be patient, wait for that perfect pitch to come to you and say no as much as possible. I know that's something that you've said many times.
Yeah.
But I got to get your thoughts on AI stocks, right? It's been called a bubble and it has all the ingredients for a bubble, but it seems like we haven't seen the grand finale really yet. And with other bubbles, you have a clear winner, right? A clear horse that people are betting on. If it's crypto, Bitcoin was the clear, doesn't seem like there is that established winner yet. It seems like people are still looking. So my question is, which companies or company do you think is best positioned to be the winner, so to speak, of AI or a potential AI boom?
Well, we do know already who the winners are. That's why the same stocks broke out. So we already know. No one wants to admit it.
Do you think that'll come to fruition though? Is that real, or is that?
It's already over. Because if you want to hire,
you're talking like NVIDIA, Microsoft.
You can go to OpenAI and look into the jobs.
Yeah.
Ask 10 people what they're getting paid to be an engineer. $1 million.
Yeah.
Okay. How many startups can afford $3 million engineers?
Not many.
0. Unless you're just a drunk VC and wants to try and take on Microsoft and Google. So the game's over. We may that's the way I see it as a non-techie. It was stupid in 2020 to pay $300,000 or $400,000 for a top engineer. You're going to tell me your startup? Oh, and if you come to me with a startup that says you're in AI, and I ask what you're paying your engineer, and you say 300, I go, they must be shit engineers.
Have you gotten approached by many AI companies?
I mean, we're all getting approached. It's just you got to know what again. Am I chasing or am I following my own instinct? I'm never going to be an AI investor because $1 million an engineer, and I wasn't even good at the last time judging an engineer. I thought they were overpaid at $400,000. So if the best company's paying $1 million, why did you get engineers at $300,000 a year? So they can't be the best engineers, or they would go to San Francisco and apply to Google or Microsoft or OpenAI. So there's a boom going on, but you got to move back and work for OpenAI in San Francisco. Yeah. So in 10 years, we'll go, well, how did San Francisco come back? Well, the AI boom. So San Francisco may come back.
You think we'll be talking about that?
And it could be worse this time because now you're paying these people $1 million. But so anything's possible. I just think the price action of the top 7 companies prove that we already have the winner. It's not any one winner. It's just the people that have the biggest moats and networks are going to apply AI because they can afford it and they're already way ahead. And so we don't know what the best features of AI are going to be and the best products, but the 7 leaders or 10 leaders that are breaking out right now, the real money is voting that they've solved it already.
Yeah.
Yeah, and we don't want to see a world where that isn't, because then we have the big correction ahead. So I'm just assuming the game's already over. And that AI is great. AI is great for this show, for making the chart report. AI is good for StockTwits because we already have 6 million people sharing. We own that data. So AI is good for companies that you've forgotten about. It's bad for certain companies. If you were a media company and you had 100 people typing out articles, you're out of business. But if you want to build a media company today because you're very good at using Midjourney and you're very good at using ChatGPT, you're in business. So that's happening. But yeah, I think the game's decided. I think it's Apple, Microsoft, Google. and obviously NVIDIA on hardware, but Apple's going to have their own hardware. Tesla's going to have their own chips. So there's going to be fighting amongst those planets.
Right.
So this is like whatever. This is like, what are the movies everybody makes under the one brand, the superhero movie? This is Marvel.
Yeah.
It's just the Marvel economy. It's just superheroes battling over planets, and you and I are left with like our little scraps. But that's okay. Because there's pickleball, there's food, there's like entertainment, there's like Tinder.
There's the degenerate economy, yeah.
Economy, and that'll keep us happy.
No,
the middle class is fucked. Because you imagine what middle class is.
I mean, it's been screwed for a while now,
You're
right?
in a fantasy.
Yeah.
Go rent, travel, gamble, invest, build a company, build something with high brand, take your time, be an expert. But yeah, if you want to take on the big guys, you're dreaming. And then the middle is controlled by Home Depot, Walmart, the people that have distribution and figured out they're going to have the benefit of like being able to, they know how to work with low margins already. AI will help them.
So I want to move on to crypto real quick. Seems like a lot of the froth was kind of washed out of the crypto markets in the last year and a half. You had that massive drawdown and FTX, Silicon Valley Bank, all the stuff that went on with that. How did the whole FTX blow up kind of change ventures, or how venture capitalists are investing in Web3? And I mean, you really don't hear about Web3 much anymore. How are you kind of thinking about all that? Yeah.
Well, it's just the web. I'll call it Web3 because, like I said, my mentor Fred Wilson calls it Web3. He's a smart guy. Yeah. So it is Web3. It's just taking forever because there were no rules.
But these things do take time.
Well, there were no rules.
Yeah.
If you and I 100 years ago wanted to discover California, we had to put all our shit in our coach, get a guide, pack up for 100 days or whatever, plan the trip, cross the mountain, get killed by Indians or have our money stolen, right? Like there was the Wild West. You had to go discover it. Well, we just had
kind of seems like crypto's like that.
We just had our first attack on government, which is from crypto. Everybody packed up their bags and said, we got it. We're going to fucking destroy governments. No one needs US dollars. We don't need SEC. We don't need rules. We're going to like Web3 was their California. Yeah. But guess what? A lot of banditos. There's a lot of scammers that were stealing your money. I never liked the idea of having a wallet. That's what I'm saying. We need Apple. Yeah. A lot of pain and criminals. The Indians look different. The cowboys look different. Rattlesnakes look different. But we've just gone through this stagecoach phase. But everybody thought they were an expert. And the real people like me who really are interested in this stuff, I don't understand how to keep my wallet secure. Therefore, I wasn't playing. Yeah. I need a little bit of centralization. Don't blame me that I was born in America. I wasn't born in Argentina. If I was born in Argentina, I would have a very different view of what crypto is.
Well, and that's how it started. But even in the last couple weeks, with the BlackRock ETF announcement and all that, it kind of seems like the narrative is shifted from, we're going to make this a decentralized thing away from institutions to, turns out the institutions won kind of thing.
You can get both.
Yeah.
So this was the lie again. It's just everybody's telling their own story. The best entrepreneurs are storytellers. Who didn't want to be told stories? Who wants to be told stories? Poor people. They want to get rich. Right. They have no money. Might as well take a shot on goal. That was that is speculation. Yeah. The people that are most likely, Morgan Housel said, to take risks are the people without money. They got fooled by the snake oil salesman, the digital snake oil salesman. So like I said, if those people were really paying taxes and not leaving the country, the SEC wouldn't be doing what it's doing. But a bear market is a great time for the government to step in. Gensler's going to be hated, probably a lot of good reasons to hate him, beyond crypto, but it is what it is. Here's what we know. Bitcoin is amazing. Here's why it's amazing. It's still $28,000, $30,000 despite everything going on.
Do you ever stop and think about that? Like, man, this thing's worth how much?
Beanie Babies.
I mean, it wasn't too long ago. We were at Stocktoberfest and this thing was $5,000 and people were losing their minds.
Because you can take it off the network and store it. That is gold. It may not be worth anything, but it is, you took it off the network, meaning it's not on the network. It is literally stored on a hard drive and you can put it in your safety deposit box. Isn't that what you're supposed to do with gold too? So it has one property for sure. No one wants it to be just that, but that's why it survived.
Right.
What comes next, I don't know. So we have that and Ethereum, and both the government has said they're not securities for now, so they aren't. And Ethereum is a different form of Bitcoin in the sense that it's programmable for now, and that they're burning supposedly more than can be mined. So it's deflationary, which is the opposite of a currency. So therefore, it's at 1900 today, which is pretty amazing.
Yeah.
Okay, you got two things going for that bubble. Much like remember Amazon was wrecked at the end of the first bubble.
Oh yeah.
So I'm saying.
Went from 1,000, I think, down back to $1.
Amazon represents the 1,000 of shitcoins.
Right.
Okay. But you had eBay that came out unscathed, and you had a few other ones, but there were the pets.com. So Bitcoin and Ethereum survived. Not only survived, thrived. And so that's a win.
Right.
So,
it's almost
so
like every time
Web3 is a thing.
Every time it goes through those cycles where, massive drawdown, then recovery, it almost like it kind of galvanizes it, or like the base gets even more encouraged by it.
Now, we need everybody that wants to own Bitcoin has a chance to own it. So it is going to need it can't just be, it's going to have more
Marginal buyers. Right?
Yeah, marginal buyers. So I'm not a professional at that level. I do know that as they kill it in the US, I'm an investor in enough crypto funds to track it and talk to managers to know that like the numbers aren't going down. US is a mess, but internationally, sorry, if you live in Argentina, this is the future.
You know what? I just saw Bitcoin broke out to all-time highs yesterday. Denominated in Argentinian pesos.
Yes. Does that not make the most sense of all time?
I thought that was a good laugh.
You can't open a store in Argentina because by the time your inventory arrives, you're out of business because of inflation.
Right.
So of course Bitcoin matters to them, if not gold. But Bitcoin's way more valuable to me than gold if I live in Argentina in case I had to leave.
Because you can actually transact with it.
You can actually leave.
I'm going to chip off my piece of gold and then give it to you.
The people that are overthinking this are just wrong. That's why I own Bitcoin. Not for any other reason. Do I trust the institutions? Do I trust Gensler? Do I trust the guy chirping on Twitter? No. But the price action tells me that and Ethereum survived. Okay? That's a pretty good, that's like our version of that's our Web 2 survivors. Now, is it as good as the internet? No. So therefore, it's going to take a long time. The good news about BlackRock and all these guys getting as evil as they are, and as I'm sure they're all coordinated. You have to assume it's rigged. You'll drive yourself crazy if not. So let's assume it's rigged. How could you not believe it's not rigged in 2023? They fucking announce it on the same day. It's like, come on, they don't even care anymore.
Right.
They're not even trying.
It was like 2 days after the SEC stuff.
We would wait a week,
right.
But come on.
Right.
Like they're doing it an hour after. So it's like, okay, so no one's joking and lying about this. This has just had to happen. So I'm happy it's happening. Why? Because we need some rules so that we can all use it and maybe get a faster internet. And the centralized piece will come, the decentralized piece will come later. Once we can get the costs down and people build on this stuff, then you can build a decentralized version of a Twitter later on. And decentralized may not mean you can hide your money from the government, but you may be able to hide your data. And that would be a win because AT&T and Verizon have it.
Yeah.
So we may not get fully decentralized, and America doesn't need fully decentralized. Even if you did fully decentralized, half the country would use Facebook. So you give them decentralized, they would still go to Facebook because it's easy to log in.
That's America for you.
But that's just fact. It's just ease of use. So until it becomes easier to do than Facebook, why would you use anything other than Facebook? So this is a natural progression. And the industry has only itself to blame for not self-regulating. And that's rather bullish. Now, our overlords look exactly. What I'm not bullish on is I hate BlackRock. I don't trust Larry Fink or whatever it is. His name is Fink. Like, you don't trust a person named Fink. It'd be like trusting Shithead. So we have the same overlords. That's kind of sad.
Yeah.
That 01, 08, the banking crisis, the GFC, it's like the same people are in charge. So all our work that was trying to create like a better financial system, out the window.
Yeah.
All right. I'm not going to like go lock myself in my room and complain. I complain a little bit, but like, okay. So now you take another shot on goal, you regroup, you reposition, you reattack.
Yeah.
And that's about all you can do.
I think it's interesting you brought up like who's that next marginal buyer going to be, because that's something I've been wondering. You know, it seems like in the last cycle, the public got involved in such a big way.
Yeah, not as big as you think.
I guess you could say that for every cycle, but you know, with the Super Bowl ads and you had Larry David and Tom Brady and all these people. Yeah.
That was an obvious sign of the top, not use.
And to your point, you know, the marginal buyer could come from people actually using this as a currency, which you really haven't seen that adoption yet.
Gensler admitted it's current. He used them; those two, they are enough.
Yeah.
You've got two currencies.
And Gensler,
do you need 10?
Gensler actually knows a ton about blockchain.
He knows what he's doing.
He taught the course on blockchain at MIT.
I don't like any of these people, but what you can take away from this is, barring some other technological thing that I don't understand, from everybody that I trust that has read the white paper, I've read it, but you know, everybody else that I actually smart and read the white paper, is they vouch for it. So, and the price matters. Price is saying these are something. So, two new currencies. If you hate the government, yeah, you may get taxed, but you can literally have 100% of your money in Bitcoin and Ethereum.
Yeah,
now, you have to manage it properly. That goes back to our Wild West stagecoach thing. God bless you. Do you need a third? Not really. You know what I mean? So
right.
Take your wins. This is a huge win. If you're in Argentina, nothing changed. If you're in the US, yes, it changed. You know what changed? If it's going to be harder to be a criminal. Okay, I'm all for that. I wish we did a better job of enforcing the rules that we have. That's my biggest beef, you know. And I think the original question started with FTX, so we should probably talk about that.
Yeah, I mean, we can go there if you want. I mean,
the FTX thing was very close because he's a smart guy. You know, I don't like getting fooled. No one likes getting fooled. I had him on my podcast before he was famous in early 20.
Did they ever come to you guys for an investment? Or?
No, I went to him just to interview him on my podcast, Panic with Friends, and I'm thinking what year it was. It was early 22. And
so like a year before he got arrested.
Yeah, a year before. Anyways, if you can go back and listen to it, Panic with Friends with Sam Bankman. And it was a pretty good interview in the sense that I don't understand half the shit I was asking, but people were telling me what to ask. He was talking about
like this one.
No, we understand what we're talking about here. We just are not giving predictions. He understood. The real question is, why was he in Hong Kong? He knew. And who was he working with? Is it truly by himself, or maybe he's working with JP Morgan? Maybe you just don't know, and I don't like to be a conspiracy theorist. Yeah. But I talked to him, super smart guy. He knew how the sausage was made. And then we talked strategy at the end of the podcast. I was asking him my stupid questions, boxers or briefs, and how he dates, and he was not enjoying that part because he's a little bit on the spectrum. But at the end of the podcast, we really dove into like the future of like who he should buy, and like Angel List and like Robinhood. He knew his shit because he was Jane Street, and like he knew how to build these products. So there's no reason to steal.
Yeah.
Like if you know how to make them, you have to be a really sick criminal mastermind to not just make money knowing what you know. So who knows what happened since then, but it definitely never feels good to interview it's like a serial killer of finance. You know what I mean? Like a terrorist at some level. But I went back and listened to it, and I don't know. I feel like you don't want to promote these people. So I feel like
you didn't know at the time. No, the guy was being treated as a
fan of someone who was like living in Hong Kong. They were after him, and the product was good. Like FTX International, you couldn't use it, but like the product was great. People loved it. You talk to hedge funds in Australia, they were using it. In London, the people were using it, and it was their platform. Why would he? If you got a great product and people are using it, Why are you stealing? Like, you wouldn't expect Zuckerberg to steal. You wouldn't expect Elon Musk to steal. They don't need to steal.
Right.
So that's confusing. It always shakes your confidence. So the way I look at this is there's this giant network, and he was cancer. Right? And you know what happens with cancer? It's really messy. You have to cut it out. You have to clean it up. It takes a long time to heal. Yeah. He was just a cancerous node in this network, and he figured out how to get everywhere, like a virus, and it caused a lot of damage. It shakes your confidence when that person is amongst you and acts like you act.
Right.
Yeah, he had the differences in his personality and his social, because of whatever the
quirks,
spectrum.
yeah.
And we all knew those, but we all were suckered.
Right.
So it's never good.
That kind of fell into his charm almost.
There was no charm. It wasn't about charm. It was that he knew his stuff. You know what I'm saying? Like, there's a difference of charm, which is WeWork. He didn't know his stuff. He had charm.
Right.
And there's a difference between Sam, who was born to do this.
That's almost more dangerous, right?
It's so twisted what he did. Right. Like, WeWork, all right, you're an idiot. You believe that nonsense? Whereas him is like, I was supposed to believe the guy. He knew how to make it. He had a good product. He had no reason to steal. And he did all that.
Yeah.
That shakes you.
Yeah.
So that is just one of the good news is we all make mistakes. People that like feel bad about losing money. Key is not to make the same mistake over. So if I look back at the Sam stuff and the FTX stuff, it's like, I have a podcast. I didn't have him on 6 times. He didn't get through my filter where I was like a constant guest. You know, you can fool me one time, but it's like my guests like Ben Hunt and Jeff Richards and the people I have at JC, the people I have on 5-6 times.
Yeah.
That's when I'm like, those are your homies. That you build this network and you try and like shed off like the posers and the fakers. But they get it. They're out there. And that's the networked economy that we're in. And you got to take the good with the bad.
I kind of want to go back and listen to that podcast. I didn't know you had him on.
Yeah, because he wasn't famous.
That. Yeah.
But it was famous to me because he was doing things that made sense.
Yeah. Or he wasn't infamous yet. He wasn't infamous. Right. Well, Howard, we got to wrap it up. But thanks again for coming on. And we'll have to do it again soon.
All right.
Yeah. Thank you guys for watching. If you enjoyed the show, be sure to click like and subscribe. And we'll see you again next week. Thanks.